Welcome to part 5 of the TaxMemory.ai Answers series. Let's get right into it and see how TaxMemory.ai handles another tough tax question. This one has a few details that really matter, so we're going to paste the scenario into the chat and see if TaxMemory.ai can break it down clearly, apply the right tax rules, and give us an accurate answer with authority and next steps. Here it goes. A 30% partner died owning an interest in an appreciated real estate partnership with no Section 754 election on file. Should the partnership elect for 2025? And how is the Section 743B step-up allocated? This is a tricky question because it involves multiple partnership tax rules working together. TaxMemory.ai has to determine whether a Section 754 election makes sense, and then correctly allocate any resulting Section 743B step-up. And it did a great job with this difficult question. With an appreciated real estate partnership and a partner's death, it is usually advantageous to make a Section 754 election for the year of death, here, 2025. So the successor to the 30% interest receives a Section 743B special basis step-up. The Section 743B adjustment equals the successor's outside basis minus their share of the partnership's inside basis, and it is then allocated among partnership assets under Section 755, generally to the appreciated real estate assets, and then between land and building based on relative fair market values and built-in gain. TaxMemory.ai then gives us a high-level explanation of why it chose its answer. Instead of reading through every detail, I'll summarize the key sections. First, it explains why a Section 754 election is usually beneficial in this situation. The main takeaway is that the election allows the heir to receive a special basis adjustment, which can create additional depreciation and reduce future taxable gain. It also points out that while the election creates an ongoing administrative obligation, the tax benefits will often outweigh that burden in an appreciated real estate partnership. Next, it explains how the Section 743B adjustment is calculated. In simple terms, it compares the heir's outside basis in the partnership interest to their share of the partnership's inside basis. The difference between those two amounts determines whether there is a step up or step down. Finally, it explains how that adjustment is allocated under Section 755. The adjustment is generally assigned to the assets that contain the built-in appreciation, which in this case would primarily be the real estate. It also discusses how the adjustment is divided between land and building, how the building portion may generate additional depreciation, and how the partnership tracks these special basis adjustments separately for the successor partner. And once again, we get our verified authority citations with clickable links so we can review the source material ourselves if we want to dive deeper. We then get the recommended action steps to move the client matter forward. First, confirm the year of death and that 2025 is the year of transfer, and make sure the Section 754 election statement is attached to the timely filed 2025 Form 1065, including extensions. Next, compute the successor's outside basis and their share of the partnership's inside basis, including liabilities, immediately after death to determine the Section 743B adjustment amount. Then prepare a Section 755 allocation schedule, assigning the adjustment to specific real estate assets and between land and building based on fair market value and built-in gain. Finally, set up a partner-specific Section 743B basis schedule and depreciation detail so the special basis is reflected only in the successor's depreciation and gain or loss allocations going forward. And if we wanted to, we could have TaxMemory.ai draft a client email requesting the information from those action steps, and then run the actual calculations once the client responds. But for now, we'll wrap up here. This question wasn't simple. We gave TaxMemory.ai a multi-layered partnership issue involving a partner's death, appreciated real estate, and basis adjustments across several code sections. It handled it the way a knowledgeable tax advisor would, walked through the analysis, cited the controlling authority with clickable links, and gave us clear action steps to move the matter forward. That combination of technical depth, verified sourcing, and practical next steps is exactly what makes TaxMemory.ai so powerful for tax professionals.